Well, the new year is upon us, 2020. It's time for new investors to get started in their investing life. And we're going to talk about what I feel is a good option for young investors, Charles Schwab ETFs. Coming up next, Firefighters Financial Toolbox. Hi guys, welcome back to the program. My name is Brad. This is the Firefighters Financial Toolbox. Today we're going to talk about Charles Schwab and their discount ETF line. Now, as you may remember, Charles Schwab revolutionized the large discount brokerage world back in October when they announced that they were going to get rid of all commissions on ETFs and stock trades. And then they announced also that they were going to start offering fractional shares. Now, what is a fractional share important for? Because you can buy part of a stock. Let me give you an example. Let's say you want to buy a share of Amazon. Amazon stock is about $1,800, you guys. So you would have to wait until you saved up $1,800 to buy one single share of that stock. With fractional shares, I could buy $50 or a little portion of a share of Amazon stock. Charles Schwab was the very first one to offer that. Now, I will say that they have not admitted when this is going to start, but they have started commission-free trading. And they're doing it in order to attract more younger investors, you guys. Schwab, in a bid for younger clients to allow investors to buy and sell fractional shares of stock. They know millennials are smarter than my generation. I'm a Gen Xer. We didn't have YouTube to explain how to get into investing. There wasn't an internet really out there to learn when I was 20. It came on later. You guys, you have the advantage of knowledge, and you can get the knowledge here. All right, so let's talk about what this means to us. If you're a beginning investor, I feel like it's easier to go with a basket of stocks. Picking stocks is hard. Now, you could go out and buy a stock and get lucky and it could double. Or you could go out and buy a stock and that company could go bankrupt and you'd be broke. So by using an ETF, which is an exchange traded fund, you get a basket of stocks, hundreds of stocks in one fund. One thing that Charles Schwab has not done when buying ETFs is you cannot buy yet, and they do not have plans to offer fractional shares of an ETF. So you have to buy ETFs like you buy individual stocks. One share of an ETF, for example, might cost $50. Now these depend, right? So you would have to have that amount of money to buy one share. But by doing that, you can get yourself a basket of stocks. Let's talk about my three favorite Schwab ETFs. The first one I'm going to talk about is the Schwab 1000 Index. Now, this is unique to Charles Schwab. It is a ETF of the 1,000 biggest companies in the United States. So everybody knows about the S&P 500, right? The 500 biggest companies. This actually gives you twice as many companies for a small expense ratio of 0.05%. So what does that mean to us? 5 basis points. 5 basis points means for every $10,000 you invest, you're going to pay $5 in fees. That's all. All right. Ticker symbol for Schwab 1000 Index is SCHK. All right. Again, all large companies, the 1,000 biggest companies in the United States. So all big companies, lots of diversification. You've got tech, you've got healthcare, you've got industrials, you got it all in one fund. The second fund we're going to talk about, let's talk about the Schwab US Large Cap ETF. Now, ticker symbol for this is SCHX. This is like the closest thing they have to an S&P 500, but it actually has 750 companies in this index. And they are the 750 largest companies in the United States. So where the Schwab 1000 Index gave you 1,000 companies, this one gives you 750. Now, has a very low expense ratio of 0.03%. Very closely tracks the S&P 500 as well because it has S&P 500 plus some extra companies. The third one we want to talk about is the Schwab US Broad Market Index, ETF, ticker symbol SCHB. Now, this is one that is more diversified, you guys. This is more like a total stock market index. This has 2,500 publicly traded US companies. The nice thing about this is it gives you large cap companies, like the other two did. It gives you some mid cap companies, and it gives you some small cap companies. So you have a little bit bigger picture of the whole US stock market. Again, super low expense ratio of 0.03%. So $3 on 10,000. Now, again, this is going to track fairly similar. However, you will notice some differences in this one when you have, for example, small cap is doing well or doing poorly. You will have a little variance. You are, again, better diversified because you have big companies, you have medium-sized companies, and you have some small companies. You guys, when you're starting out, the easiest thing to do is to put your money into a fund and just run with it. Now, I'm not giving you advice on which one to do. I'm simply giving you some ideas to think about in the new year, in 2020, for low-cost options that you can buy and hold forever. These are funds that you can buy and add to every year until you retire. You guys, I hope you got something out of this. If you did, give me a thumbs up. If you're new to the channel, please subscribe. It really helps me out. We're almost to 300. I'm pretty excited about that. So you guys, if you have any questions about it or you have other funds you think I should add, put them in the comments. I like to hear what you guys say. I like to keep this interactive. We have a pretty good community online. As long as you guys keep watching, I'll keep making content. All right. Thanks a lot.